Welcome to WTF Orange County, or the weekly trend forecast for Orange County. My name is Nathan Necochea, and I'll be your guide through the sea of data from Altos Research, and I'll give you my thoughts on what it means for home sellers, home buyers, and our local market. Now let's dive in. We're going to start out with the Market Action Index. This is a comparison of home sales versus inventory. An MAI of 30 represents a balanced market, and what we're seeing in Orange County is really anything but balanced. At the close of last week, we're sitting with an MAI of 48, which places Orange County firmly in a seller's market. That is down-ish from last month's 49, but let's be honest, it's not anything buyers should be thrilled with, at least not yet. In terms of inventory, Orange County is basically holding at or near 2,300-ish homes. We're definitely not seeing a buildup of new listings, and as I'll show you in a minute, is because of demand. Now, let's take a look at price decreases. This is an important metric because it can signify a drop in demand. So what we're looking for here is a percentage rate that exceeds the typical 30 to 35%. And as that percentage pushes higher, it tells us the demand for homes at the current pricing is down and adjustments were necessary. That means, obviously, that if the percentage is under the norm, demand is very high. In Orange County, we're seeing just 32% of homes take a decrease, which is well within the normal range, telling me that demand is sufficient for the inventory at its current price. The converse of that is price increases. This metric is typically under the 5% mark. If that percentage pushes above that level, it can be a sign of higher investor activity in the market or just very high demand. Here in Orange County, we're currently sitting with 2% of homes with price increases. That's a signal that sellers are pricing their homes appropriately for the given level of demand. The next data point I like to use as kind of a magic 8-ball is the percentage of homes that are relisted. These are homes that either expired, were canceled, or the transaction fell through. What we're looking for here is a number under 10%. The higher this number goes, the stronger the sign of a potential market correction. If this number is very low, it's a strong sign of a very hot market. Well, Orange County is normal, 10%. I strongly recommend keeping an eye on this number. Buyers, as the percentage increases, we can infer weakening demand, which means more opportunities for you. Now, let's jump back to inventory and what's happening with all of that. Now, I find it useful to view this by market segment. Each market is divided into 4 segments: the top, the upper, the lower, and the bottom. So for the last week, here are the Orange County market segments. This is a great visual expression of why we're not seeing an accumulation of inventory. It's demand. Demand is simply outweighing supply. Take a look here. The bottom market segment saw 111 new homes hit the market, but had 152 absorbed. The lower segment saw 91 homes hit the market with 110 absorbed. The upper segment had 71 new and 81 absorbed. Even the top market segment saw 31 new listings, but had 46 absorbed. So the story in Orange County is that demand, even deflated demand, is outpacing new listings. This is presenting a unique opportunity for sellers during this time of year when we would normally start seeing a buildup of inventory. So sellers, you may want to consider selling sooner rather than later to take advantage of the sheer lack of competition and strong buyer demand. One other thing to consider is that if mortgage rates continue to see some downward pressure, home prices will go up with additional buyers coming to the market. So, selling now might be an option if you want to take advantage of current demand and prices, and really prices that are right now lower than what we're likely to see next spring. Buyers, even with demand picking up, you might find an opportunity in homes that have been sitting on the market or by acting faster than your competition. The good news is that sellers are, well, on average, pricing their homes correctly, and you might want to consider the current level of competition versus what you'll face next spring. As the rates drop, bidding wars become more likely, and just some things for you to consider. So to wrap a pretty little bow on this episode, Orange County is in a seller's market, with inventory still being the major issue and demand doing enough just to keep things moving along. If you're a buyer or a seller looking to navigate some of these waters, I'm not here to convince you either way. I'm just here to help you steer your ship. Just don't forget to subscribe for more insights. Until next time.